Welcome. I'm Natalie. Let's talk about money. So today we're going to talk a little bit about the changes in taxes for 2025. So these are all the changes that are going to happen and will take effect when you file your taxes next year for the 2025 year. So that's what we're going to go over, okay? And keeping in mind, you should always check with a professional if you want to make any adjustments to your tax withholdings or what you're doing with your investments or anything like that. Always check with a professional so you can get the best advice possible. Okay, so if you've been watching the news or been watching even just YouTube for that matter, you'll notice that there's a lot of people talking about what's changing in taxes for 2025. So whether you're, a taxpayer trying to save more, a business owner trying to plan for the next fiscal year, or just if you're curious on how, Uncle Sam is going to reach into your pocket and steal all your money, this is what we're going to go through today. So step one is, why does this matter? Why do you care? So taxes aren't just about what you owe. They actually do shape everything from your take-home pay to your retirement plans. Every year tax codes adjust basically to reflect the changes in the economy. So, they care about what is happening in the economy to try to benefit the American public. So, the economic changes, the political priorities, the inflation, all of that plays a part in what changes every year in the tax codes. So basically, if you know what's coming and you know what's happening, it's just going to, enable you to have more money in your pocket. Now, of course, if you have a really good tax person who's preparing your taxes, they will help you with this. They will make sure that they're getting the most for you, getting the most back for you. You also have to think about withholding, though, because you shouldn't give the government a loan interest-free for up to a year until you file for your taxes. If you're, paying your taxes normally, like everyone does on their checks, well, unless you're 1099, but if you're a standard W-2, you're paying taxes every paycheck, every month of every year. And if you are having too much withheld and you get a huge return every whatever month, it depends on when you file, of course, every February, March, April, or May, then you're giving the government a loan interest-free. Why are we doing that? Keep more of that money in your own pocket so that you can go buy more groceries, or you can go buy an oil change for your car, or whatever it is, okay? Keep more of that money in your pocket. Control your withholding so that you're not getting this $10,000 return that you're going to then go put down on a car next fall. Keep that money in your pocket and let it grow with interest by putting it in a money market account. Like, seriously. Anyway, so basically just stay informed so that you can keep more money in your pocket. And, there's a few changes that we're going to walk through, like with numbers and everything. So the IRS has adjusted the tax brackets for inflation, which is somewhat standard, but inflation has been crazy wild over the last couple of years. So this basically, right now, the changes they've made this year basically means that the thresholds for each tax rate are shifting. So if you're a single filer making around $50,000, your taxable income might now fall into a lower bracket, which then means that you're going to reduce your overall tax burden. So if you're a person that's in the middle of a tax bracket, this tax bracket change may not help you at all. But if you're a person that's getting close to one of the tax bracket thresholds, this could make a difference for you because it could put you in a lower tax bracket, meaning you pay less taxes. So these are numbers that you probably need to know and need to learn about. So right now, our standard deductions are increasing. Well, right now, meaning 2025. So the standard deductions are increasing. This means you can write off or you can deduct more of the money that you have. Okay. So for singles, which I'm a single person, and so this is what I care about most, but for singles, it's moving from $13,850 up to $14,200. So that is what? That is $350 that it's increasing. So you can now deduct $350 more than you could in 2024. So for married couples filing jointly, it's moved up to $28,400. Now, if you're in a super high tax bracket, you're probably not watching this channel, but if you are, the top marginal tax rate is 37%, and that still applies. That's not changing. But the income thresholds, again, have changed. So the income thresholds for every bracket have changed. So that's something you want to check out. You want to talk with your tax expert and see, does this, help you? Will this make a difference for you, basically? So let me pop in real quick and remind you to please give the video a big thumbs up. Leave a comment down below. Be sure to subscribe. When you subscribe, you should hit the bell so you know when the next video comes out. Tell me down below, do you care about the $400, $500 changes that they're making in taxes? Does that matter for you? Doesn't every dollar count? Just a question. Leave a comment down below. So there are some tax credits and deductions that we should probably, go over. So they can be game changers depending on where you sit in your life and who you're sitting with in your life, okay? So the child tax credit has been adjusted. It's increased slightly due to inflation. So again, these aren't, thousands of dollars that you're going to get back all of a sudden. But any increase should be helpful. Any increase is something that you didn't have the previous year. So I want everyone to be thankful and grateful that they're getting more. They're getting more back. So if you have children and you file for the child tax credit, that amount has been adjusted. And then also the earned income tax credit now covers more individuals without children. So also those that have a little bit higher income. So if you have no qualifying children, your adjusted gross income needs to be less than $19,104. If you have one qualifying child, that number is $50,434. If you have two qualifying children, it moves up to $57,310. If you have three or more qualifying children, it's $61,555. So this is all for the earned income tax credit. You can check, if you go to some of the free sites that do taxes for you, it will basically, you put your numbers in, it'll give you a general idea of how much tax you would be getting back. And so this will take effect again in 2025. So it's not going to, if you haven't filed your taxes yet, it doesn't matter for this year, you're going to file right now. That doesn't matter. That's already gone. This will take effect next January when we start to file taxes next January. Okay. So now also if you're a student, I don't know how many students watch my videos at all, but if you're a student, the American Opportunity Credit and Lifetime Learning Credit have had minor adjustments. That's a long name. American Opportunity Credit and Lifetime Learning Credit. They've had adjustments as well. So again, it's best to talk with a tax expert no matter what your situation is. It's best to talk to an expert so that they can guide you in the best way possible. So now, also for business owners. So Section 179 deductions for equipment purchases have a higher limit this year. So you can spend more basically on your equipment. So additionally, there are some changes to how pass-through entities like LLCs handle their qualified business income deductions. So your pass-throughs, there's going to be a difference there as well. So now the corporate tax rate remains at 21%, but there are discussions around potential tax reforms. So, you do have to, again, pay attention, know what's going on in the world so that you can plan properly. Okay. Now, along with all of those changes is our actual investment changes, which is what I care about the most. So we also have investments that have changed, and what the difference is there, how much you can contribute and how much is basically sheltered from taxes. So the contribution limits for 401k plans, any 401k plan around the country from, hundreds of thousands of companies, the amount has increased from $23,000 that you can contribute up to $23,500. Now, for those of us that are kind of on a normal average income, this maybe doesn't affect us as much because we may not have $23,000 to invest every year. But for those that do invest $23,000 every year, that limit has now increased again to $23,500. So it just kind of depends on how much you deposit or how much you contribute. That's when it will make a difference for you. The more you contribute, the better off it is, of course, because you have more for your retirement account so that you're more comfortable when you get old. It's important to be comfortable when you get old and when you're young too. But when you get old, you need to be comfortable so that you can afford the lifestyle that you want. So you do want to make sure that you're looking out for potential pitfalls. So you certainly don't want to underpay anything because you don't want any underpayment penalties, due to the changes in the estimated tax payments or miscalculating your adjusted gross income. You don't want to go and mess up your numbers just by guessing. So once again, I'll remind you to go and check with an expert because they will be able to put your numbers in or even just tell you what the thresholds are and what you qualify for and what to expect for the future. Make sure you always consult with a professional. That is the only way to do it properly and to ensure that you get the most back on your taxes, or to make sure you have the highest withholding without having to owe a bunch of money at the end of the year. Okay? I'm going to say it again. Are we ready? Here we go one more time. Consult a professional before changing or making decisions. And that's true of all decisions. That's true whether you're talking about investing, whether you're talking about changing how much is withheld on your checks for taxes, whether you're talking about buying a house, all the things. Check with professionals. They're there for a reason. They're there to help you. Okay? So one of the main things that I want you all to understand is that you should keep track of all the things that are changing in our world. We are going through some crazy times right now, and we need to pay attention, be aware, and learn so that it's not all of a sudden a big scare or a big, oh my gosh, I didn't realize blah, 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 whatever the blah, blah, blah is. If you are investing and they are increasing how much you can contribute, take advantage of that if you can. Take advantage of that if you can. Okay? So I want to remind you, of course, that you should invest in yourself today so that you can make a difference for others tomorrow. Go ahead and give the video a big thumbs up. Leave a comment down below. Be sure to subscribe. When you subscribe, you should hit the bell so you know when the next video comes out. I thank you so much for stopping by today. Our next stop is going to be 200 subscribers. Are we on our way? All right. Thank you so much. Y'all have a great one.